There's no question that Bitcoin is superior to gold in every respect. And I believe Bitcoin is digital gold, and we live in a digital world. I think Bitcoin will replace gold fully. The tradable gold is more like, 4 to 5 trillion. So, but I think as money shifts out of other assets, both Bitcoin and gold can win. And I think both of them are going to go up in price, just Bitcoin a lot faster. I could easily see us in this cycle go to 300 or 400 and then correct back to 250 or something. I mean, it's, I think the volatility will be there for a while. That's not going to go away. It's going to be less. I mean, I think the biggest drawdown was like 90% in the beginning. We're never going to see one of those again. You're not going to get to buy Bitcoin 90% lower than it is today. You might get to buy it 50% lower than it is at the peak that we're heading towards. That seems possible.
Watch out. Bitcoin is set to reach $300,000 to $400,000 this cycle as it slowly replaces gold. That's the latest word from Larry Lepard, founder and managing partner of Equity Management Associates. Bitcoin is becoming the digital gold of our time, ready to surpass traditional assets like gold in value and popularity. While gold has been a trusted store of wealth for years, Bitcoin's ease of use and limited supply are making it a top choice for many. As more big investors jump on board, both gold and Bitcoin are expected to rise in price, but Bitcoin's growth is happening much faster. Larry thinks it could even reach $300,000 or $400,000 soon, proving it's here to stay. And as price volatility becomes lesser, Bitcoin is looking more and more like a solid investment for the future. Make sure to stick around until the end of the video, as Larry Lepard shares more mind-blowing Bitcoin outlooks. Also guys, only a small percentage of my viewers are actually subscribed. If you enjoy staying up to date with finance content, consider subscribing or liking the video. It's free and you can always change your mind. Now let's go back to the video and hear from Larry Lepard.
History shows that when monetary systems break, the way you get the economy or the society back on track is you return to sound money. And so, the problem is, our money is very unsound and getting more unsound as we go, day by day. We were in a really unsound money system. It's getting worse. So, it's pretty simple. When something's broken, that's what you got to fix. You've got to have sound money. Pre-Bitcoin, that choice to do that would have been to go back to a gold standard. And who knows, there might be a time when the authorities try that because it's more tried and true. And, some people are afraid of Bitcoin, although I'm encouraged by what I see Trump and, a lot of Americans thinking that maybe we can just skip the whole gold step and go straight to Bitcoin. But, the two forms of sound money that exist in the world are gold and Bitcoin. I call gold analog sound money, Bitcoin is digital sound money. And, we need to go back to that. Once we get back to a sound money standard, things will be pretty good. In fact, very quickly, I think. But, the transition from here to there is going to be bumpy, and, it's not at all clear how it's going to unfold. And I talk about that in the book. I have a lot of scenarios. I have a policy response section. I have, I kind of map out the various places that we could go here, because none of us really know with certainty what's going to happen. But I'm pretty sure, pretty high probability that given how broken the old thing is, human beings, generally speaking, trend in the right direction towards improvement. So I think we'll ultimately fix this thing and be back on a sound money standard. But it's, it takes time. It's not just tomorrow,
Where do you think banks are going to be in all these new reorganized?
Very interesting question. Yeah, I think, first of all, I think they'll probably end up embracing Bitcoin, or they'll get left behind. Second of all, fractional reserve lending, I talk about that a lot in the book and how that creates money and how that's what really the core source of the problem, that these guys get way out over their skis and then they go bankrupt and then they get bailed out and then we print money to bail them out, and that's what fuels the inflation. It's a vicious cycle. I think the banks will be restrained. I think that if we really do return to a sound money standard, banks won't be able to lever themselves up. And in fact, in the book, I call for, abolishing the Federal Reserve and abolishing FDIC and basically having no backstop on the banks, so that a bank would have to behave in a responsible manner. And if they didn't, they'd go bankrupt. And if they went bankrupt, all the depositors in that bank would lose. And so there'd be a real incentive, for them to behave well, as opposed to the incentives that we now have, which create a lot of what we call moral hazard, where they just say, hey, who cares? I can be, like they did in 2008, I can be extremely aggressive, make as much money as possible. When the whole thing blows up, they'll just bail me out. I mean, that therein lies the problem, right? That bailout costs everyone else money because they print that money to bail them out. They get saved, and we all pay more for gasoline and food. It's just that simple. There's no question that Bitcoin is superior to gold in every respect, and I believe Bitcoin is digital gold, and we live in a digital world. I think Bitcoin will replace gold fully. However, not tomorrow. 8 billion people know that gold is sound money. A few hundred million, maybe at a large number, I'd say probably even less than that, really understand that Bitcoin is sound money. And so, it's done a pretty nice job. It's $2 trillion of market cap. Gold is closer to 18, as you say, although not all of the gold's tradable. I mean, you kind of consider the central bank gold, the antiquities gold, the gold that's on women's necks in the form of jewelry. Of course, that could be tradable. You could melt down your gold necklace, but the tradable gold is more like 4 to 5 trillion. But I think as money shifts out of other assets, I mean, both Bitcoin and gold can win, and I think both of them are going to go up in price. Just Bitcoin a lot faster, and because Bitcoin's got they both benefit from monetary debasement, but Bitcoin's got an adoption curve going on too. And so, Jesse Meyer on Twitter has a great chart that shows $900 trillion of financial assets, with real estate being half of that, and the balance being stocks and bonds and gold and cash. And, we're at 2 trillion. So it's 0.2 of 1% is currently Bitcoin. So we got a long way to go. I mean, Bitcoin could do a 10 bagger from here, which would imply that we'd be at $1 million a coin, and we'd still only be 2% of total global assets. So this is the soundest form of money ever invented. So I think Bitcoin is going to do a 10 bagger, and I think it's going to do a 10 bagger again. But on what time frame, I don't really know. I mean, I use this kind of a lower end base case, the power law model, because it's got a lot of correlation looking backwards, and I think that shows you at 1 million in 5-6 years. But I think you probably get there faster than that. We're at that stage now, kind of the tipping point. I mean, the ETFs were a huge thing, right? And now we've got a president and administration that's crypto friendly and Bitcoin friendly. Things I heard when I was at MENA, you were there too, are that the strategic reserve is something they're going to do. We now know. I also heard at MENA that other nation states, including the UAE, Oman, and the Saudis, are all stacking Bitcoin. It's a coming thing, and it might surprise us. We just don't know. We just really don't know. But in my mind, it's going to be digital gold and then some. And I think both gold and Bitcoin are going to go up a lot in nominal, fiat money terms, because we printed a lot of fiat money, and they're going to have to print more.
The current financial system is broken due to unsound money and reckless banking practices. Lepard believes that history shows the only way to fix a failing monetary system is by returning to sound money, which today means either gold or Bitcoin. He suggests that Bitcoin is emerging as the preferred alternative, potentially skipping the need for a gold-backed system entirely. Additionally, he is optimistic that a transition to sound money will happen, but he acknowledges that the process will be challenging. He warns that banks must adapt to Bitcoin or risk being left behind. He also criticizes fractional reserve banking, where banks take excessive risks knowing they will be bailed out. He argues that eliminating the Federal Reserve and FDIC would force banks to operate responsibly, preventing the cycle of reckless lending, bailouts, and inflation that ultimately hurts everyday people. Now let's go back to the video and hear more from Larry Lepard.
This is a crypto-friendly administration, though, and that's a huge positive. I mean, Operation Choke Point, will get shut down. Banks will be able to do it. SAB 121, will not get through, and so the banks will now be able to custody and deal in Bitcoin. I mean, this is a big deal. You'll be able to borrow against your Bitcoin. I mean, there are a lot of good things coming that I think are going to be enormously positive. I mean, as I said, nation states. I mean, El Salvador continues to stack, and I think there are a lot of nation states behind the scenes that are stacking Bitcoin. So, I mean, to me, I remember Saylor saying recently, we're kind of in that golden age, gold rush of Bitcoin. The 10 years where it just does the most, the fastest, and that's kind of how it feels to me. Like we're right at that cusp. of really, putting up some numbers that people are like, oh my God, look at this. I mean, we're not going to stop at 100. We're going to go to 200 and then 300. And, and people are going to be like, whoa, and some will continue to say it's a bubble, but it's not. It's the real deal. Having said that, there'll be volatility. I mean, you mentioned, because of the way the cycles work, because of the halving, because just people tend to get out too far over their skis, and then of course FUD sets in and some people sell. I could easily see us in the cycle go to 300 or 400 and then correct back to 250 or something. I mean, it's, that I think the volatility will be there for a while. That's not going to go away. It's going to be less. I mean, I think the biggest drawdown was like 90% in the beginning. We're never going to see one of those again. You're not going to get to buy Bitcoin 90% lower than it is today. You might get to buy it 50% lower than it is at the peak that we're heading towards. That seems possible. The gold ETF did very well, by the way, when it was launched in the early 2000s. It did extremely well, grew very rapidly, and it helped fuel the gold price from $250 to $1,900 an ounce. It was a big deal. But this is done, it's blown it away. Much more quickly.
There is a positive signal from the administration, right? Which means if you are someone on the fence of maybe thinking of investing, well, now you have no blockers and it's been legitimized.
Exactly. I can't tell you how many friends I had who said, well, yeah, that's all nice. I get your theory, but the government's going to shut that down. Well, I honestly, I was kind of scared that we wouldn't get an ETF. I thought, they're going to figure out ways to stop that, but they didn't. And the ETFs are huge. They're really, really big.
Do you think, are we going to see an in-kind soon coming in?
Yeah, that's a great question. There are a lot of things you'd love to have in an in-kind ETF. You'd love to have, no capital gains tax on Bitcoin. Trump kind of floated that in one of his conversations. I don't know. I think those might be dreams that are a little bit too far. I think they're very doable further out as Bitcoin becomes more part of the infrastructure and ecosystem. Everyone will kind of want that, and so the government will have to bend to it. But I just don't know. Even the strategic reserve. I think what they're going to do, Bitcoin strategic reserve. I think they're going to do it as an executive order. If you consider that, basically Nixon and Roosevelt, they didn't go through Congress to do what they did monetarily. Roosevelt grabbed gold and then revalued. Nixon broke the chain to gold at 71 and devalued, and they just did it on their own. So I think that Trump will probably do an EO where he says, we're buying Bitcoin. Now, the question is how much and from what source, and the exchange stabilization fund's not huge, and it's used for other things, but they could use it to do this. I love the Loomis bill that says they're going to buy 1 million coins over a period of time. I've heard mixed debates on that. I've heard some people say, oh yeah, it's no problem. She's got the votes, they'll get it through. And I've heard others say there's no way. So I don't know. That'd be really great, but I'm not counting on that. But you don't really need any of that. Because we're going in the right direction. And I think the surprises, my sense is the surprises will be positive surprises because we are going in the right direction. And I compare it to gold this year. I just did my quarterly year-end report, and Bitcoin was up 121% last year. Gold had a good year. Gold was up like 27, 28%. It's a very good year, but Bitcoin was up 121%. It's just, and I don't see what's going to stop it. I just don't. I see more adoption. I see more, more use cases developing all the time. So, betting against it to me just seems crazy. And to not have some, I try to tell all my clients, you don't have to go crazy on this thing. It's got a lot of upside. You can only lose 1x what you put in it. I think you can make 10x or 100x if you wait long enough. And so you need to have some, because if you don't buy it and it goes up 100x, you're going to have regret, even if it was only, 10,000. 10,000 times 100 is a big number. So, and although Bitcoin doesn't pay a yield for older people like myself, what I can envision happening if I were to stop working at some point, and I probably will, I would just sell 1% a year and use that as my living expenses. And, I don't know, what have we got, 30 years left? The balance that I didn't sell would go up in value. So every year I'd have to sell a smaller percent, right? Unless my living costs went up a lot. So, it provides you with a sense of comfort that you're never going to run out of money, which is a really fabulous thing, because I watch my dad, and I've watched most retired people kind of go through this, where, you can retire with a nice sum of money. It's your life's work, it's your savings, but you don't know how long you're going to live, and your expenses are going to increase, and you might get to the point where, geez, I'm going to run out of money, and I'm going to have to really curtail my lifestyle because I haven't saved enough. And this is kind of the other side of that problem where, it goes up so much that you're unlikely to run out of money. That's how everybody who's ever gotten rich has gotten rich, is by having savings and allowing them to compound over time. They save in assets or a form of money that they know will grow in value. And then they let the beauty of compounding work for them. I mean, it's amazing. I think most young people, unless they've really sat down with a calculator and played with it, they don't understand just how powerful compounding is. You just save 10% of your income. I mean, there are all these stories of people who lived very modest lives, never really made big money, but managed to save 10% of their money or sometimes more, and put it into things that went up in value, not down in value. And by the time they were in their 50s or 60s or 70s, it was kind of stunning how rich they were. So, it does work, but it requires a certain amount of discipline, and it requires putting, the key piece is it requires never losing the money, putting it into things that hold their value or go up in value, year after year.
With Operation Choke Point ending, SAB 121 repealed, and banks now able to engage with Bitcoin, institutions are preparing for massive adoption. Nation-states like El Salvador continue accumulating Bitcoin, while talk of a US strategic Bitcoin reserve grows stronger. With increasing demand, Bitcoin is on track for exponential growth, leaving many to wonder just how high it will go. Finally, Larry notes that betting against it seems riskier than ever, as more institutions and investors recognize its long-term potential. Anyway, guys, before we go, if you want to stay most up to date on the crypto and Bitcoin world, make sure to subscribe to my daily 5-minute crypto newsletter. It's a concise resource for the latest expert predictions, breaking news, and top-on-chain analysis, trusted by over 50,000 subscribers for insightful crypto investment information. Don't miss out on the opportunity to stay informed in the crypto market. The link is in the description below. I hope you all enjoyed today's video and that it provided you with some value. I'll see you all in the next one, and as always, all the best.